Heightened tensions in the Korean peninsula and the Middle East, as well as the looming French presidential election, means investors are once again heading for the Golden Hills. John Butler of Gold Money is here with me now to get more of an idea as to where it's going next. Hello to you. Thank you for coming in.
My pleasure.
It's all about geopolitical tension, isn't it? Driving money into gold.
It certainly is. This has been a huge reversal in terms of the expectations that were in place after Trump's election, when people thought, well, if anything, he's going to try to de-escalate some of these flashpoints. At least he was talking that sort of strategy.
Yeah.
And yet all of a sudden, here we go. I mean, it's all kicking off suddenly, it seems, right? You've got missile strikes, you've got saber, in Syria, you've got saber rattling around Korea, South China Sea, obviously, Middle East more generally. All of a sudden, all of these areas seem to be going kind of live. And I'm in no position to predict what's going to happen, but just the raw uncertainty of it all has really elevated dramatically of late. And of course, gold benefits from that.
Given the tensions, which are extreme, no doubt about that, gold should be higher.
I agree with that. I agree strongly with that, in fact. And I think there are opposing forces here a little bit. First of all, to some extent, gold is the mirror image of the stock market, because if the stock market looks like it's in a healthy uptrend, everyone's natural inclination is just to ride that and to ignore gold as the safe haven. So they're kind of mirror images of one another. And the fact is that the stock market also has not materially suffered, notwithstanding these risks. So for some reason, markets are simply complacent generally. It's not just that gold's doing badly, is that the stock market and certain other risk assets are holding up surprisingly well. It's a bit of both. And to be fair, you see this in markets sometimes. Sometimes old trends die hard. This is one of the longest stock bull markets in history, and to actually get it to roll over properly is going to be difficult.
Well, if a war can't bring it down, what will?
An actual war would, okay?
Yeah.
I mean, if it actually comes to that, it would. And it's kind of funny. You can draw this historical analogy, which is sadly very frightening in a way, with the outbreak of the First World War, which until literally 48 hours before it kicks off, no one honestly believed it would happen. They thought that somehow, some way, they would stop it. And so financial markets in Europe and the United States were doing just fine, pretty much, until literally 2 days before all hell breaks loose. Now let's hope, God forbid, it doesn't happen this time around, but markets can be extremely complacent for a period of time, even as the risks grow and grow until you reach the tipping point that nobody can predict.
And what about the Federal Reserve? What part are they playing now?
Well, this is an interesting one, because the Fed, of course, have been talking hawkish all along. They've really been trying to maybe rebuild their credibility, having blinked so many times in recent years. But yet, now they're still talking hawkish at a time when at least hard economic data, not necessarily surveys and the soft data, but hard economic data has rolled over. I mean, the U.S. is clearly slowing down from what was already an anemic growth rate. In other words, there could be a recession ahead. And if you look in particular at commercial and industrial loans, which really is sort of the ultimate leading indicator of whether businesses are investing and whether jobs growth is going to be coming through, that's at its weakest year-on-year growth level for years. It's a warning sign.
That's a scenario, because if there was going to be a recession in the US, what would that do to Trump's popularity?
Well,
wow.
It hurts Trump's popularity. It hurts the dollar, other factors equal, because the U.S. has been the cleanest dirty shirt ever since the financial crisis, more or less, right? And if the dollar begins to roll over, just in general, gold is such an obvious beneficiary in what is a geopolitically risk-elevated environment.
Let's just say Marine Le Pen doesn't win the French presidential election. Russia and the US become best friends tomorrow. What's going to happen to gold?
Look, that's possible as well. And yes, gold will go right back down again, other factors equal. Now, that said, I don't believe other factors are equal. Returning back to the economics we just discussed a moment ago, the outlook for the Fed and the dollar and the U.S. economy, there's this underlying economic current that I believe is, in fact, gold supportive. I think the Fed will blink again before the year is out. So even if you get a temporary respite in the geopolitical tension and gold moves back down perhaps towards the lower end of the corridor it's been in for quite a while now, if the economic data continues to develop the way it has of late and the Fed blink, gold will go right back up again and maybe break out to the upside.
And what number would that be?
I think a lot of people look at 1250 as a nice round number that we're hovering around right now. You need to have a material leap above that level and hold it for some period of time, get your moving averages improving, and then gold is going to 1300 in a heartbeat.